Okay, well, let's take a little bit of a pivot, as they say, and talk about property. The global economic outlook has refocused investors on the diversification and income security. So Matthew Lane from MA Financial Group joins us to tell us more about what they're looking at. Thank you so much for joining us there today. Good little counterpoint to get you on there and to talk about property in particular. But what's your view on the property landscape? Obviously, you know, we get caught up in the news cycle as well, like we do with equities, and prices are coming off. They're coming off from very high levels. What's your outlook for property and investing in property at the moment?
Well, thanks, Kyle, for having me on. So this year, we haven't seen that volatility like you've seen in the equities. However, the market has generally paused from just commercial real estate. And that's because vendors, the sellers and the buyers are still trying to understand what's happening with the interest rate cycle. But earlier this week, when we saw a 25 basis point movement versus a 50, that, I believe, was the first sign that the market will start to show confidence. So looking into 2023, we would expect to see more buyers come back into the market. We already know from the agents that there is stock starting to get listed for the start of next year, or the appointments. And so I'd like to see that there's more liquidity in the market. But the last 6 months has been a bit of a pause button.
Interesting, because that's the thing, isn't it? Like, I mean, a lot of punters would be out there, you know, associating their property side of their portfolio with effectively residential property. There's that commercial element that's very important too. I mean, how have the returns compared in commercial property to, say, other asset classes?
Yeah, so take commercial property. Historically, over the last 10 years, it's delivered around a 9.5% return. Whereas you look at equities, my understanding that's around 9.3%. And the bond market are much lower in the mid-twos. And it's done that, importantly, with a lot less volatility. And that's because you're seeing what's making up of that 9.5% is around 70% of that is from income. Now, income with real estate, commercial real estate, comes from fixed contracts, and they typically go from 3 years to 10 years. And so you've got that consistent income coming through real estate. And again, that's actually particularly important in this environment where you've got inflation, because you've got fixed reviews or CPI-linked reviews as you roll through that lease term. And then as leases expire, what you're seeing is market rental growth. And market rental growth is a reflection of demand and supply. And so with supply being constrained through higher construction costs, what that means is the developers have to charge higher rents. And so those existing buildings that we invest in are getting a competitive edge over new stock. And so either new stock will be slower to come on, or if it does come on, it will bring the whole market up, and then you're protected from inflation.
Interesting. So what are some of the fundamental drivers here as well in the commercial space? Because again, they're different to, again, you know, real estate and other things. And we've had a few people coming on talking about, you know, the real investability at the moment of commercial real estate. What do you see as being the factors there that are sort of, I guess, tailwinds to the space?
Yeah, well, you've got the mega trends like population growth. Over the next 10 years, the forecast is around 1.3% per annum population growth. In context of that, that's significant above the other developed world. And so that's going to drive GDP at around 3% per annum over the longer period. That's fundamentally part of that demand for all real estate, whether it's residential, office, retail. And so you've got that mega trend there. But what I find in particular that's interesting is looking at each individual sector and working out what's the trend within the sector. So take office, for example. When you're looking at office, you really need to there's a bifurcation happening in the market where the secondary stock is sort of being passed on, and the better product is only getting better. And so when I say better product, I mean location, amenity has to be strong and reflective of the current trends in the market, because you're trying to get people out of their homes into the city, into the office. So there needs to be a reason for that. So it's amenity, it's making sure that technology stands up, and importantly, which is often overlooked, the space needs to be creative. It needs to be a point of interest. You need to entice people to get out of their homes and come and be the social people that we are. and you do that in a built form that's inviting and it's interesting and so on. So that's a structural trend we're seeing, and that's why we're focusing on assets like that. We've recently secured an asset in Perth, Allendale, and that's because of the location, the amenity. So it's all those fundamentals that you can say that are in residential also apply in shopping centres, in industrial and in office.
Yeah, just as well, making reference to something you alluded to before, I mean, I've got to ask about potential risks. Is interest rate risk still high on the agenda now with where we are in the cycle, or is that something you kind of look through when you're investing in this space?
You're definitely looking at it, and that's why there's been that pause this last 6 months. Is we've been trying to work out where the peak of the cycle is and how long that's going to be. So what we've seen is the forward yield curve really blow out from the start of the year, and so that is why the market has held off, because the purchasers aren't sure what to factor in. But again, back to earlier this week, it's great to see a sign of confidence starting to hit the market with lower climbs. We're starting to feel like we can see the end of that cycle coming through early 2023. Yeah. So yeah, absolutely, it's a core component of what we look at.